in property, everyone focuses on assets and things, but it's actually equity that will bring you the freedom. It is not the cash flow. You don't have a money problem, right? You have a hard expense problem. And what you need to realize is, actually what I need is an asset which will generate 10%. Half of that's going to go in taxes and other expenses and everything. And then that's it. You cannot be in the top 10% and be a conformist. You cannot be average and outperform. When you're a beginner, you're just focusing on your first deal. Why do people do that? They all say they're looking to make money, but actually what they want is credibility and confidence. Making money for yourself is selfish, right? But if you're gonna move up in life, you've got to be selfless. First thing is figuring out the assets, right? And the mistake that everybody makes is
Before we get into this episode, I just wanted to thank all of the people that have recently subscribed to our channel. We've had a lot of growth and comments and feedback recently, and they've all been super positive. All those comments, all those shares, all those likes, all those subscribes really help the channel grow. Please do check out our sponsors, and we look forward to growing with you. Hello everybody, and welcome to another episode of Property People. Today I am delighted to be joined by Mr. Vanish Patel. How are you, Vanish?
I'm doing good. How are you doing, Sam?
Best day of my life, as always. Vanish, you and I, we go back a number of years. You are one of my favorite people as well in property. I've said that a few times for a few people, but I genuinely mean that with you because we've spent some quality time together, and you've helped me out a lot over the years. And I really, really do appreciate that. And I thought for those reasons, many reasons, but those reasons in particular, I thought you'd add a lot of value to the people that are going to be watching this, hopefully, and people in property. So before we dive into a few questions where you can share all of your insights from years and years in the business, you are a successful property investor and master networker and capital raiser, along with being a developer. With over 30 plus years of property investing, you've got a wide range of skills, which also include private lending, whether it be bridging or development finance. I've also borrowed money from you once upon a time, and to multi-million-pound developments in Kensington, Chelsea, and much, much, much more. So with all of the stuff that we're going to talk about, the place that I always like to start, though, is a little bit about you, and in particular, who were you at school? What type of person were you? Were you introverted? Were you extroverted? Were you skiving off, or were you a straight A student? Did you enjoy school? Did you always know that you'd be in property when you grew up?
Hey, that's a good question. So I think there's two parts to that question, right? So first is at school I was academically bright, okay, and I don't think there was very much at school that would have highlighted to me, right, or at that time, that I was going to actually become a property investor, I think. But I think sometimes what happens is when you're at school, you see things and certain behaviors, right, that happen in there. So if you're in school, you've only got one channel, which is what score do you get on your grades? That's the only way that you can judge. And unfortunately, in our education system, the education system is geared for the middle 50. So if you are in the bottom 10%, or if you're in the top 10%, it doesn't actually fit you. Yeah, because it's not designed for entrepreneurs. School is designed for people who are going to be in the middle, right, to get the basic minimum education.
Yeah.
So being in that school environment, it's not what I did in school that really made the difference, right? The only thing that I had from my school environment was the fact that in my family, owning businesses was very common. So when I went to school, right, so one of the things that I ask is the question is not so much what were you like at school or what were you like at young. So the question that I sometimes ask people, which is the thing I like to dig in, is how much money did you make under the age of 25 outside of a job? And what you find is that a lot of people, they do these little side things or little projects or little things, right, that enable them to make money. And they get their first taste of business, and that kind of sets them. So I knew early at school that, yes, I've got to get academic. And why was I at school? Because everyone else had to go there. And why did I go to university? Well, truth be told, because my parents told me you got to go, right, to get an education and everything. But outside of that, in school, when I was in sixth form, when I was at university, we were all doing these little money ventures. Yeah.
Little side hustles, little kind of ways to make more money. Was that out of necessity because you were poor background, or was that just because you were a little bit enterprising and you were just kind of like, hey, I see an opportunity here and let's see what happens?
Well, it wasn't because I was poor. My parents reasonably well off. It's more that I would call it the adventure, right? So
The thrill of it, yeah.
yeah. So the fact is, it wasn't about making money. It was about doing certain things.
Yeah.
So for me, like for example, I studied IT. Okay, and because of just the way the thing was structured, I ended up having to go to a different school to be able to, because the school I was in, they didn't do computer science, right? And so I had to go to another school. I had to actually go evening classes to learn computer science, because that's what I wanted to do. And then I went to the local college, studied that, and I got connected with the library person, and they had a computer thing, and I basically helped them out as part of it. And then one day, the librarian approached me and said, "Oh, we got this problem with this computer thing, and I've got to do this project, and would you be interested in helping me?" And long story short, I ended up doing a summer project, and I made £300 helping them write a computer program to do with their library catalogue. And the fact was, it was a side gig.
Right.
And so I look back at all these little things that I did that enabled me to make money, right? To connect with another person and actually find a problem and say, actually, I've got a solution. And oh, by the way, do you mind paying a little bit towards that?
Yeah.
Right. Now, some things I did free, some things I got paid, some things I just picked a random number, just like, whether they just so they say no, and then they say yes, and like, damn, right?
If they say yes too quickly, it's probably too low. If they
Yeah.
too high.
So you start learning this stuff, right? And like this is why we talk about, like, learning to get a client. Like, so one of the things I always tell people is the value of money that you make from a job should be less than the money that you make from a business. Because what everybody does is they use the same unit currency. Oh, I got this job, I'm making £10,000, and I got this side business, and I'm making £10,000. And I go, no. If you're under 30, right, you should put that 10 times more, because that is giving you the taste of first blood, right? I'm always interested in how did you make your first £10,000? Or first £1,000 when you're young, right? Because the fact is, majority of people never get there. Right? What do? Right? They go and get a job, part-time job in Asda, stacking. It's all a job, right? That's just you turning up, CV, follow the motions. Someone young going out and saying, okay, would you want me to get your car washed? Or, we did these little projects. We ended up doing side gigs of when we were at university, right? I was involved in the entertainment industry, so that's why I like the interesting with the microphones. Events, right? And then we ended up doing people's parties and, charging a little free, and got, and then we got involved. So it was all these little ventures, right, that enabled it. And then, by the way, we just asked for money because we needed to cover our costs. It wasn't about profit. It was just about do enough so that we could do it again. Okay. Or, we'd save up money to lose a bit of money, right? It was all just part of the learning process.
And if it went well, then you see where it goes, and one thing leads to another. I think at that age is like, it's a good way of looking at it. It's kind of how much money have you made outside of a job before you're 25? That probably can tell you a lot about the person's character. And
yes, because what I always say is after 25, right, it gets harder and harder, right? And you get it into a pattern. So what I've always seen is I'm always interested in how they came about. And then the thing is, as you get older, you can look back and you can join the dots.
Yeah.
Like right at the moment, I'm helping a young person. They're like 23, right? And they're like, I want to get into, like they're in lettings at the moment, right? And they got their first private client. And I'm like, you got to close this. You got to put all this effort in because you
Yeah.
are getting,
Your first landlord.
your first private client, right? Print up a crappy little business card, right? Do an email address. It can be Gmail, Outlook, whatever, right? Because that's 100% you, someone investing and trusting you at this age to do a property. Whether it makes money or not, don't worry. This is what you want to get involved in because these are the mechanics that will serve you well in the next 30 years, right? Getting your first private client, private gig, right? It's all the stepping stones, and that's why you'll end up one day getting a private investor, and that will really accelerate.
With the fact that you've been quite academically bright, bit of a hustler, doing this, that, and the other, learning a little bit about how to make money, relationships with different people, how did all of that, from IT especially, did you get into property?
So it's kind of funny. So I knew very early on, right, that there was two reasons for going to university. One was basically please the parents, got to learn something. If I'm going to be there for 4 years, let's pick a subject that I actually have some interest in, right? So computers and technology was the thing. And then I thought, you know what, I'm going to go and then work in some big companies and get that experience. And then eventually, at some point, I'm going to quit all of that and I'm going to do my own thing. I'd always had a long-term thing of I want to own my own business, right? So I did that. I worked for large companies, did very well. I got involved in projects. I shifted from being a permanent employee to a contractor, right, which gave me the flexibility. I actually got paid for jumping from project to project because you can hire and fire and move around, and I developed a whole skill set. That forced me then to learn how to run a company and set up that activity and take the risk of, you just there, you do your thing, you get paid, right? No benefits, no career, and every Friday, you empty out your desk on the assumption they might not ask you to come back next week, right? So you get comfortable with that sort of risk taking.
At what age were you doing contracting?
I think that was early 20s. So I did that for a couple of years. And then I had this kind of in my head, do you know what? Before I'm 30, I'm going to quit the city, right? Now, I don't recommend this to anybody, right? So I'm just telling you what I did. It's not what you should do, right? But basically, I made enough money that I could handle a little bit. And then I quit the IT industry, right? And then I went full-time into property.
But what was the catalyst? What suddenly triggered you to decide that was the thing to do?
Very simple, right? For me, in our family environment, right? Basically, you've got to remember this. You're going to have a lifestyle, and it's going to cost you a certain amount of money. And there are two ways that you can make that money. You can make that money through trading your time and doing a job, and that's one route, and you can make a lot of money on that. But the other is learning the skill of making money through assets, right? So if you can then work out how you can purchase an asset, that income will enable you to develop your skills. So my thinking was this: well, I'm young, right? I've got low expenses, okay? I can reduce my costs. I haven't got, in that situation where I've got too many dependents. So if I don't start now, it's just going to get harder and harder as I go along, yeah? So what I did was I just basically, I remember I got this opportunity and they were going to pay me a nice sum of money. And I said, no, I'm leaving the city, right? I'm going to get on. I've got to start.
Before 30 or was it at 30?
Before 30, right? And what I tell people is, and this happens with everybody that quits, is you get used to that lifestyle and security, and then you enter, you do your own thing. And the first 6 months is great because there's a break. You can get up when you like. You've got an empty diary. You can do all of that, right? And then 6 months, about a year, right? Then the depression starts kicking in because you've got more money going out than coming in, and that becomes your norm. And then normally, month 18 is when you hit kind of rock bottom because you're like, I've made a bad decision. Because you're judging your performance based on your bank account, and that's always, a bad way, right? You should, if you're smart, you should be judging yourself based on your skill set and what you can achieve in the next 10, 20 years. this is the reason why people get hooked onto the paycheck, right? I always tell people, unfortunately, Tooth Fairy, Santa Claus, and the 25th of the month, right? These are all man-made products, right? Okay, they don't exist in the jungle, right? When you're running a business, right, knowing how to manage your cash flow, right, and knowing how to structure deals so that bills get paid, that is also a skill that you've got to learn, right? So this is the reason why.
And they don't teach that at school.
No, look.
And where can people learn this stuff? It's super important. And you are right, absolutely, that people will leave a job, and it's really hard to leave a high salary job. I know some managing directors and stuff, they're on 100, 150 grand, 200 grand plus, and it's kind of like, if I'm going to go to, and they've got a wife and kids and a mortgage, it's like, how am I going to actually now leave that and then start a business and not earn anything for the next 12 months or 18 months or 24 months, and who knows if it's going to be a success or not?
Because remember, the school system, right, all the way through is educated for the middle 50, right? And the middle 50 are the ones that are going to get a job, right? So that's the whole way that it works, right? So if you're trying to, look, only about 10% of people really ever, even land on trying to make a business work, right? And then, the success and failure rate, right?
Exactly.
And that's because, they haven't understood, right, the mechanics. The first thing is you've got a lifestyle expense. You have to translate that into, an income, right? And then work out your assets. Do you see? So what you want to do is have a hard expense and translate that to a specific asset. So what we try to do, I'm sure you do this with people that you help, is work out the asset and translate that directly to a bill. So, for example, let's say your water bill, yeah? How much is your water bill, Sam?
50 quid a month.
50 quid a month, right? How much water do you use?
A lot when I'm in the shower, drink a lot of water, but I don't know gallons or liters for sure.
So now the reason I ask this question, right, is because what happens is we get sucked into, when we go to school, we're taught maths. Maths teaches us 2 + 2 = 4. But did you at school ever have a money class?
Never.
No, right? So what I find is people just translate everything to money, right? And so the first thing I say is, get educated. So you know how much your water bill is, but you don't know actually how much water you use, right? And so what you do is you translate the amount of water you're going to use, right? And you link that to an asset, to a hard asset. So link a hard expense to a hard asset. So let's take your example. £50 a month is your water bill, and it's interesting that you said £50 per month. Everybody translates expenses to per month.
Instead of £600 a year.
Yes. Now what you should be doing, if you're an investor, it's not £600 per year. It's 6,000 for 1 decade.
Right.
Now we're saying the same thing, right? But this is what happens. We get this leakage.
How do you quantify it?
Yeah. So what happens is, if you're selling a car, you bring it out. It's only £300, right? But there's 120.
People are talking about weekly wages. Footballers still, they talk about weekly wages, right?
Yeah. Now
they don't talk about they're making 20 million a year. It's like how
remember
£1 million
this,
a week or £500
right?
a week.
Language shapes thoughts. Yeah, words
100%.
shape thoughts.
Totally
So
agree
what
with
I
that.
always do when I'm speaking with people, we talk and we see this. Oh, it's £50 a month,
Yeah,
right?
yeah,
And then
yeah.
I say, how much water you use, right? Okay. So just to help you, the average person uses 140 liters per day.
Is that right?
Yeah. Okay. Now that translates to 50,000 liters per year. That's 500,000 liters of water you will consume in the next decade.
Interesting.
Do you see? Right now, why this first
Half of
thing-
that's because they're brushing the teeth and leaving the tap on as well.
Yeah. It's all of the other things that go with it. Now, the reason is, if you take an expense, right, you translate that into an asset.
Yeah.
So what happens is, what you really should be thinking is £600, right? And then you translate that, and the way we simply do it is saying 1,200 is the rent you need to pay for that bill. And then if we get the right kind of asset, let's multiply that by 10, right? That's £12,000.
Were you, when you moved over from everything you were doing IT and into property, were you already thinking on these sorts of terms?
No,
Or do you
no,
kind of
no.
like develop this kind of perspective over time?
here's the challenge with you and me, Sam.
This episode is sponsored by the PLMD Group. PLMD Group is made up of the PLMD Development, PLMD Estate Management, and PLMD Capital, providing expertise in real estate development combined with asset management. With more than 70 build-to-rent properties and £20 million of assets under management, PLMD's extensive knowledge of local planning policies have resulted in a strong track record, turning liabilities into valuable assets. The group delivers value through a fusion of experience, innovative design, imagination, hands-on management, and sustainable resources. To find out more about PLMD and the services they offer, head to plmdgroup.co.uk.
Right? We were indoctrinated for at least a decade into the school system, right? Which teaches you one thing: conform.
I remember one of the first things you ever told me when we first sat down, and it was over a long telephone call, was, right, we need to start unlearning everything, and then we can start learning the new stuff.
Yeah. So there's three types of learning, right? There's learning, right? There's relearning, and then there's unlearning.
Yeah.
Right? I always start with saying unlearning is the thing that's going to give you the biggest bang for buck.
Yeah.
Second then is relearning, which is remembering, because your brain forgets stuff. Right? And then the learning is always last, because what you have to remember is this: what we're trying to help you do is become the non-conformist. You cannot be in the top 10% and be a conformist. You cannot be average and outperform. Right? You cannot be, a conformist if you're focusing on most of your wealth coming from property.
Interesting.
You see?
Yes.
So what we do is we just say, very simple: you don't have a money problem. Right? You have a hard expense problem. Let's take your water bill, right? And what you need to realize is, actually what I need is an asset, £12,000, right? Which will generate 10%, £12,000, £1,200 a year. Half of that's going to go in taxes and other expenses and everything, and then that's it. Now, once you've got £12,000, you don't have ever a water problem. It's done for you, and if you structure it correctly, it's done for your kids. And that's all you have to do. Now, that takes time to think through.
Yeah, of course.
Now, like you, like everybody else, okay, what asset do I buy? Where do I,
Do I go for gold, which doesn't have a kicks off an income, or do I go for stocks and shares where I get a dividend, or do I go down property, was that kind of like the thinking that you went through, and then you thought property, it goes up in value, it gives me a monthly income, and that's probably why I'm going to double down on this particular one?
True. First thing is figuring out the assets, right? And the mistake that everybody makes is they just go, I'm going to make a ton of money, right? And they don't actually think, right, first portfolio you should build is your survival portfolio.
Yeah.
Right? Which is the thing that will then transfer you so you don't need the job, so you can survive. So part of that income can come through there. The other thing is you've got active income and passive income. So I think that, yes, you're going to go find deals, right? And those things will help you long term. Right? And what you want to do is, a simple rule of thumb that I tell people is buy at least 2 to 3 times more property than you need at the end. Right? Simple reason is this: if you buy 3 times more property than you need, when it goes up, right, at some point, right, you will want to go quality of lifestyle. Sell the stuff that is, hard work or whatever, take the equity, use that to pay down the debt. Right? And then guess what you've got? You've got equity. Right? And the equity is what will then fund the lifestyle.
That'll kick off for income for you.
Exactly. So what we want to do is we want to learn how to buy the right asset, okay, and then structure it in the right way so that we have a plan of what that's going to do by just us sitting and waiting. So get as highly geared as you can in the first place so that you've put the least amount in a deal, but it cash flows.
Yeah.
Right? Buy 2 to 3 times more than you need. Right? Let it run. After 10 years, guess what you can do?
Start to kind of readjust the portfolio, but pay down, basically. Sell a few, pay down. Or some people say that, those 2 extra, 3 extra, whatever it is, they're the ones that you pay the tax on, that's capital gains, and then you can kind of sit on the rest of it.
Exactly.
So, a lot of people don't think of it on those terms, certainly pushing that a little bit further when they're growing their asset base. But then there's so many different things you can do in property. And so by the sound of what you're telling me, to replace your income or to maintain those minimal living costs, is it the high yielding income producing assets that you're kind of suggesting that people should start to look at? So I'm imagining like a doctor that owns a bunch of surgeries, or a high flying stockbroker. It's got good income, pretty much likes that business, but they want an additional income stream. They want something that's a little bit more passive income. Should they be looking at kind of buy-to-lets, HMOs, service accommodation, hotels, those sorts of assets initially,
So
rather than like ground-up developments that you're going to get chunky bits of money every kind of 12, 24 months?
you look at both, right? The trick is this, is the most important thing, well, there's two things. First is, right, the important thing is it's finding 100 deals.
How do you find 100 deals?
Right. That's the first thing. Because what everybody does, when you're a beginner, you're just focusing on your first deal. Because and the reason I say that, why do people do that, is because really they're not looking, they all say they're looking to make money, but actually what they want is credibility and confidence. Just like when I first started, I'll just do 1 or 2 deals that, like see how it goes, right? And what I've learned is, and I encourage people, I go, look, if you can find 100 deals, right, that make sense, right? And a reasonable deal is that if you bought it for cash, forget about mortgages, just I could buy something, right, £100,000, right, and it will yield me 10,000 gross rent. After that, there's expenses, tax, and everything. I've got £5,000, right? That solves my water bill, my gas bill. So, that's the rough model, right? Because all you're doing is replicating it. Now, the reason that you go find 100 is because you won't have the time. You can have the time to find 100. Most people, if they know what they're looking for, they can find at least 100 deals within a period of 5 years, right? The question is, the mistake everyone makes is they focus on what to buy because they get their ego in the way, because they have all focused on my name being on land registry. This is the badge. And I go, here's what you need to do. Go find 100 deals, right? Figure out how you monetize for the least amount of effort 90 of them, so that you can own 10. Because the profit you make from the 90 will give you the deposit or the credibility and the confidence to finance those, right? So find 100 deals and then find 100 people where you have some commonality, right, that you connect at a human level, right? And then surprise, surprise, you'll find some people with a bit of money in the bank.
To help fund those deals. Because
Exactly.
so before we dive into kind of like those deals and how you look at those 90 or 100 deals, the classic, what comes first, the money or the deal? What would you say?
You come first, right?
Elaborate.
And I'll explain what I mean by that. Right, so first is finding the deal is relatively simple in that that's just about analysis, right? So you will figure out, so the problem is figuring out where do I look for, what do I acquire? You can figure that bit out, right? Don't offer on the 100 because you'll just waste everybody's time.
You don't have the money, right?
Yeah, but you can get proof of concept that this deal stacks. All you got to do is go bring the information, bring it in front of somebody, right? That is a learned skill, very separate. That's a hunting skill, right? Okay, the capital is always going to take longer because it's a human skill and it takes time, right, for relationships to build. Right? Deals can be found tomorrow and executed. There is no personality involved to a degree with doing deals. Right? This is the reason why you can buy it through auctions, you can buy it through estate agents. Right? It's a necessary evil. Right? But it's the ability to find the money and
so
finding
the skill of finding the deal is basically the first thing. Then you can establish or identify 100 deals, and then you use your human skills rather than analytical skills, which are all objective on a spreadsheet, to actually go and build a relationship with somebody that's going to help you to fund those deals. Is that kind of order?
Yeah, and the reason,
I agree with you.
And the thing that you want to do, and people always ask me like, okay, where do I go find investors, right? And I go, you don't go looking for investors, right? You look for people that you enjoy hanging out and time with, right? Or you look for people where you have a common bridge. So the trick is always figure out the 5 things that you personally like to do, talk about, or get involved in, right? And through that, the money will materialize. So you and I, our commonality, right? Let's figure out a few of these, right? So first is
we've never done this. We've spoken a lot, but we've never talked about our commonality.
So our commonality would
similar
be,
color skin,
right? So we're both immigrants.
Yes.
Yeah. Okay. So that's a commonality. Okay. Second is property and business.
Yeah, yeah,
as an
absolutely.
example,
Yeah, yeah, yeah.
right? And you just find out, we could go through and figure out,
At one point, we lived in a similar area as well,
yeah,
not
yeah.
too far.
So geography,
Yeah,
right?
that was
So the McDonald's in Stanmore, right, was
the car
our
park.
car park. That's where we did a few business conferences and things.
Very
Yeah?
late at night as
Yeah,
well.
yeah, yeah, right.
After midnight.
So what happens is once you've found, what I find is people are always looking for the money and then trying to do the pitch. And I go, actually, pitch the friendship, pitch the camaraderie. So figure out the bridge, figure out 5 to 6 things that connect you with that person. And the reason for that is once you highlight those things, people's resistance drops, right? Oh, we live close by. Okay, well, let's just hang out, right? And then what will happen is people kind of get to know your personality, and then later on, the opportunity to commercialize the friendship.
Because here's the thing, right? Interestingly, so we were talking about building relationships. Because I get a lot of people asking me as well, how can I raise private finance? Where can I meet investors? And a lot of people say, oh, I'm not going to look in property networking events anymore because it's just saturated. Everybody's asking for the same thing. So I'm going to try and look for other other networking events with business owners. But would you say that actually, no, that's not entirely necessary? You can literally go anywhere and everywhere as long as you can have the right conversation and look to build the right relationship. You can potentially pick up an investor anywhere. Or would you say that fishing in a tech networking event is better than a property networking event to find investors?
It comes back to what is the thing that you want to talk about until 2 in the morning? What is it that you want to do till 2 in the morning? So, for example, you know and I know, right, that I enjoy partner dancing.
Yeah.
Okay? So I can go to any dancing event, right, and pick up money. Right? Why? Because I can talk about it, I can do it, right? And people pick up that passion, that energy, right? If I go to a property event, right, we just talk property, we can talk construction, we can talk planning, right? The key is that you have buzzwords, you have insight and knowledge that draws people. What most people do is they walk in and they just give off this energy, right? I need money, right? The only reason I'm talking to you is because I want to pitch to you, right? Now, I'm intelligent, so I'm not going to pitch within the first 5 minutes, right? So what you end up is you have all this small chit-chat, right? There's no passion, there's no connection, right? They're just like, oh, can I show you this deal, right? And that happens in conversation 2 or 3. What they haven't done is built a bridge.
Yeah.
Right? So what you find is once you've got those people, and again, you can play demographics. If you're going to an event, play demographics. So the key is this. If you go to an event that you're interested in. So it can be any topic. You could be interested in cars. You could be interested in yoga. I mean, whatever your passion is that you genuinely can talk to, because this is what brings people together, right?
Yeah.
So if I was really into yoga, I'd go to yoga places and meet people and chat, right? And I'd offer to have a coffee and hang out with a few other people, right? And I'll find money. Now, if I'm being smart, here's what you do. Target the right demographic, right?
Yeah.
So go above 40, right? There's more money there than below 40, right? If you're into
hanging out at youth clubs and stuff. It's
Yeah,
I like doing
if you go
amateur sports.
So if you go skateboarding,
Yeah.
right, you're gonna find broke people, right? There's money there, but for the effort that you're gonna go,
Proportionately, yeah, absolutely.
right. So you figure out a few things. There are loads of things that you do. So I always just tell people, figure out your 5 things that you're really passionate, that you're going to do anyhow, right? And then do it intelligently. Start there, build a bridge, right? And then say, hey, I'm doing this project, right? Would you like to come and see it, right? Again, you're pitching without kind of pitching, right? So for me, it's always come meet with me, hang out with me, right? Then come see a project. Do you want to come on a tour?
And that momentum as well always makes it a little bit easier, but you got to start with those relationships and build those things slowly, which is, okay, like that's part of it, which is getting the money together. So going back to the 100 deals, how do you find those 100 deals? Like what is it you've got to do to be able to get to the point where you can identify 90 to 100 deals? How would you advise somebody to do that?
You just got to hang out on Rightmove, basically. I mean, it's not, everybody has a different, there's not that many criteria, everybody has a different way of looking at it, right? So there's only going to be frankly, there's only going to be 5 ways that you're going to find deals, right? So one is obviously the classic of going on Rightmove.
The
Right.
scroll of death is very different on Facebook and Rightmove. Rightmove, you can make a lot more money, mate.
Yeah. Right. So the reason is, I say you can find, if you're early starting, just look for a particular deal type.
Yeah.
Right. So what you want to be able to do is get into the practice of finding deals. Now, if you're a beginner, don't look for perfect deals. Look for near misses. Right. And the reason is, what you want to do is you want to find a project. Right. Even though the price is wrong, the layout, the structure is. Right? And why you do this is so that you can create a conversation with somebody. Hey, I've got this deal. Let's ignore the price for a little bit. Here's the deal. This is why it's good. This is what this is what I'd have to buy it at. This is how much I'd do the refurb. This is how we'd refinance it. So you get into the mechanics of deal analysis to then do deal pitching.
Yeah.
Right? So most people want to focus on profit. Remember, everyone's focusing on money, and the smart people are focusing on skill set. Right? So for me, I sit down and say, right, let's scroll. Okay, out of 100 projects, which are the 10, what the criteria are? This is what to look for. This is the square meterage. This is the layout. This is a deal that could work, even though the price is wrong. Now we know, okay, I've got to now find something in that direction. So you've got, for example, Rightmove. You can do it through auctions. Okay, you can do it through finders.
And just when you're finding these opportunities, let's call them as well, not necessarily deals, you're running them through a little calculator that hopefully you've got your hands on. You've either built yourself or someone's given to you. And then you're running if it's a lease extension or a title split or a refurb or some sort of value add, whatever that looks like, to be able to create that profit, which is kind of what I've been doing it for. But you're just doing it on paper. You're just doing it in theory, just to see what it would look like. And then the asking price, you just reduce the asking price, or you reduce the price to whatever you would offer to make it work. And is that kind of like the exercise that people should be? Because it's very similar to what I did. I did 550 of these over 18 months to find the first few HMOs that I bought in various parts of the country.
So, for example, if you're doing, let's do a very simple strategy. We'll do the HMO strategy.
Which is what I love, yeah.
Okay, so the actual most important thing, right, is finding the right layout. It's
Absolutely.
not the most problem thing is people get focused on what can I buy it for, because
how many rooms can I get out of it, but then not,
And the better the thing that this is one of the things I teach is, look, get any property right. The most important thing is work on skill, don't work on money, right? Because that's what hooks you in and gets you going in the wrong direction. Right, so analyze the deal, look at the layout, and then figure out the room layout, the design. How much will it cost? Get familiar with all that language and terminology. So then you can look and say, right, this is what I would build. Even though you've done the analysis, the spreadsheet will then say, this is loss-making. But you've got your costings all right. Yeah, okay? And then you would also say, okay, how long would it take? How would you structure it? Okay, that way you're developing confidence in knowing that you can look at a deal, right, and then figure out what you should do, right? So the most important thing is actually go look at 100 deals and then figure out from those 100 deals, right, layouts, what you do, the 10% that are worth talking about.
Yeah, exactly.
And now what you do is don't go focus on acquiring. Use that as a conversation piece to get in front of an investor to show a bit of credibility, that you're talking some sense. You know, I saw this deal. The numbers don't look so great. Do you agree? Right?
So you can even use bad deals to say that.
Exactly, right? Because what I found is when someone comes to me and say, oh, here's this deal. I've done this, right? To make this deal work, I'd have to buy this a bit cheaper. Or we'd have to change this. Or this is wrong. Your key is demonstrate competence. Right? Competence is what gets capital to work with you. So we analyze deals. We'll look at a deal and we go, okay, well, there's nothing here to do, right? Can't do this, can't do that, can't do that. So therefore, we'd skip this. This is the 90%, right? Remember, you look at analyze 100, and you're going to get one's worth investing times, one's not worth investing time.
Yeah.
Right? So you show your skill set, and then through that, you'll get a conversation. You can do that. Now, when I've got a deal that's the numbers are more sense, can I come back to you? which means you got your first yes. I'm interested in seeing another project if it's So it doesn't matter whether it's good, bad, ugly, right? The most important thing is, can I get 5 minutes? Can I run some numbers through you? And can you tell me, am I going in the right direction or wrong direction?
From all the different stuff in property as well that you've done and that you do, which is your most favorite thing, like from development to being a landlord to lending money? Do you have a favorite within these things? Or a least favorite?
I think it depends what mood I'm in, right? So if I'm being truthful, I have my seasons, right? I think just the type of person I am, I have certain moods where I want to be very active, right? I'm sure you've had this situation, Sam. You're all geared. We're going to do developments, and then after 2 years of developments, you're like,
blow my brains out.
Yeah. I'm just going to go out to landlording. Yeah. Then you go do landlording, right? And then you get involved in that, and it's too passive.
I get one more call.
Yeah. Actually, I'll tell you one thing I found. Right, is I found this. Everybody's chasing passive income, right? And I've said you can get sometimes too much passive income. So this is why, I kind of keep coming out of semi-retirement, right? Because I realized that my brain goes to mush.
Well, let's talk about passive income very quickly, because some people there's a big kind of there's nothing such as, you hear all these keyboard warriors on Facebook and stuff. When anyone uses the term passive income, there's some people that go, there's no such thing as passive income. So when you talk about the word and phrase of passive income, can you define it on how you see it?
Yeah, partly true, because all properties are living, breathing things, right? It's not the property that is always the problem, right? It's the tenant, and that's how you make it. So unless you have a property like a piece of land that's going to capital appreciate over 30 years, is quite passive. Right? So you've got various levels. It just depends on who the tenant is, and how you structure it, right? So I would say towards later stages of your life, if you want to be more passive, go commercial, right?
Yeah.
Because you end up with one sensible tenant, 10, 15 years, right? When you're younger, right, go HMO, you get, rent a room, you're going to have a lot more tenants, and most of those people are going to be under 40, right, which are going to be young and, all the noise and everything, right? So that's quite active, and it requires there. Just depends where you are in your journey. Later on, you can make it more passive, right, to fit your lifestyle, right? So you can switch. You could, for example, pass it on to a housing association, right? So you're taking a little bit less money, but your time, and if you've got other things that you can do that are better uses of your time. Yeah.
I mean, I get the term passive income, and I think sometimes it gets a bit of a bad rap because people use it as a marketing tool, and then they take it literally, and it's like, yes, I literally do nothing; it's completely passive, which is not usually true. There's on the spectrum of,
and you don't
compared to a job, for example, which is 40, 50 hours a week.
Sam, you don't want to be
because,
passive.
as you say, your brain goes to mush. If you
I've seen this, right? The reason I still continue, right, to make money is not to improve my bank account, but to improve my mental and physical well-being, right?
Yeah.
The reason that I come here today, right, is because I want to be, towards the later end of my life, as sharp as the younger people. So it's always to sharpen you, use it or lose it, right?
Yeah.
So for me, I'm not concerned about how much money I make. It's how much money I make in partnership with others. Nothing excites me more than sitting down with somebody and saying, hey, here's what you could do outside of a job. Here's how you structure your deal. You do it this way, that way. Now, go off and do it, right? Because they're going to have to do the work. Now, I can, like we've done some deals together, and I get to tag along, like in our deal, and I think we did a reasonable JV, and you can tell that it's a good JV because we all, in any good JV, the other person thinks they got the easier gig. Do you see? Like this, right? Like in this podcast, right, is a good JV, right? Okay, because we both think we got the easier gig. Do you see?
Yeah, no, absolutely. And from you've collaborated with a lot of people and you've helped a lot of people, and there's a lot of people that I know in circles that we run in, and they always speak super highly of you because you've helped them so much over the years in so many different ways. where from I mean, it sounds like just what you've touched upon there is that you're doing it really to be stimulated yourself and to keep yourself sharp. Is that the core of why you do what you do in the way that you do, since you've kind of gotten yourself into a comfortable position over the years?
Yeah, there's two things. One is that in property, you can go a couple of different ways, right? It is quite, for example, here's the advantage of working in a job, right? If you're working in a job, right, you're in a group environment, the employer has a little bit more power than you, right? So you got to turn up and perform, right? And you can get hired and fired, right? So that kind of keeps you on the edge, right? But if you want to maintain your personal relationships, that's always a little bit more challenging. So I'd rather do that with the view of being the asset owner, right? I don't have to do that every single day. I can fit all that activity in, right? But at the end of the day, you're still in society. You still got to relate to all the other people, right? So for me, I just focus on, right, how much money do I need to make relatively passively?
Yeah.
How much money do I want to make actively for me? And then how much money do I want to help others make that's got nothing to do with me? Or I'm getting a smaller slice, right? Now, the reason I do that is partly for my spiritual growth,
Yeah.
right? Making money for yourself is selfish, right? But if you're going to move up in life, you've got to be selfless.
This is one of the reasons what always attracted me to you is that you I mean, you're making an investment, something obviously in it for you, and there needs to be, but you always, the way that you always approached it was that it was kind of helping, I'm doing more helping you in more ways than just monetary as well. So as an investor, what sort of things are you looking for in people that you feel comfortable backing and supporting?
Well, you're looking for a couple of things. From an investor perspective, right? The thing that you're looking for is somebody that's got organized, right? You know, they're bringing a project, right? And there is value add that they're bringing, and it's complementary to what you're bringing, right? So I look for energy, attitude, right, and sensible numbers. These are all things that I see in you, right? And you know, I saw that in the first couple of years. So I knew that all I had to do was just wait for the right opportunity where things are going to come in. And also, you know, the most important thing, and I think that I can describe this with you and me, is that we share, even though we haven't said it explicitly, we have very shared common values.
We do.
Right? And so, you know, like whenever there's being late for a meeting or we're discussing things, right, you can see all of that. And that's the reason why you've got to hang out with people and communicate your value system, right? And then just be patient for when the right opportunity comes, because you've done most of the DD.
Yeah.
And so this is, you know, part of what you're looking for, right? And then in a way, and this is a little tip for people, what am I always looking for? I'm always looking to connect with my younger self, right? And what's the other person looking for? They're looking to connect with their older self, right? And that's the reason why you kind of share these stories and ideas. Do you think?
There's that synergy where, yeah, basically I know that I'm always looking for somebody that's a few steps ahead, that I can leverage off their experience, maybe avoid a few pitfalls. And it's interesting that what you're saying is quite the opposite, where you're maybe looking for somebody with a bit more, you use the word energy.
Yeah. Look, the classic is that the 50-year-old hangs out with the 20-year-old, right? And it's a mirror, right? And that's the reason why it works, is because what you see is you see yourself. Now, it's harder looking from the bottom of the mountain looking up, because you don't know what the top is. You kind of know, right? But you don't know the feeling, right? It's like, look, are you, I think 1 year out of full time or two?
Well, the last kind of contracting job I had was 2.5 years ago now.
Right, yeah. Okay, so you're basically, my rule of thumb is this. After 3 years being full time in this thing, right, you're unemployable, right?
Yeah.
Because in the first year, you're like, oh, did I make the right decision, right? And then you have this, the depression is usually 18 months, 2 years, right? And then usually year 3 and 4, the boat starts moving in the right direction, right? And then you become less and less unemployable, right? So, like I said, 20 years ago, I just jumped ship with no real plan, right? Don't recommend that to people. I say, like, get educated.
Well, you mentioned that earlier as well. Why do you say that? Because you know what you did when you were looking at 30 years old. You just mentioned it now. Why don't you recommend people do that?
Because what I tell people is that you should do some of it part time to get the feeling. You don't need to, it's a bit like a house, okay? You can rent it for 3 months, right? And you will pretty much know that you either got a good feeling or a bad feeling, and where should you buy, right? You should date a little bit before
Get married.
yeah, right? Okay, because for a lot of people, what they think is the job is getting in the way. And then suddenly they go full time and they achieve exactly the same level of results. All right? I see this with people. Now, I do advocate taking 1 year out if you've got the savings, with a view that if you don't hit a certain milestone within the first year, you go back, get a job.
Which you can always do as well.
Yeah. But it gives you the feeling, and this is the one thing that you and I can't really communicate to people, because if you've been 10 years in the job environment and you're hanging around with everybody else that's got a job, this is different island. Like I always tell people, welcome to the island called property and business, right? We have a different set of rules, right? Different way of thinking. Step one, unlearn, right? You've got a lot of unlearning to do, right? It's going to take you 3 to 5 years. That's why, when we're trying to help people, you are in the conformist system. You come here, you're going to be a non-conformist, you're going to do things that most people are going to say crazy, right? What you want to check is find people that have done it a little bit and will say, that's not too crazy, here are some things to think about, right?
Yeah.
But you're in the right direction, do you say?
Surround yourself with good people, property people, and that should put you on a good pathway. That's certainly what's helped me a lot as well, and surrounding myself with people like yourself. What is, though, one of the biggest misconceptions or myths that you feel property investors and property developers peddle that holds them back? Is there some sort of misconception or myth that they kid themselves about?
Okay, so I would say that in our little world, people get way too hung up on cash flow, right? And what I tell people is cash flow, this is all language from the job environment, right? And what you really should be focusing is on equity.
So more or less kind of profit and loss, more balance sheet stuff. Would that be a?
It comes down to this, right? At age 75, right? How much stuff do you own, right? That is debt free, right? And so what happens is, remember this: when you have a job, it's your personal balance sheet. A job is just technically it's a piece of paper, right? You can't. Every single job I've had, I can't resell it. There's no transfer value to it, right? So in property, everyone focuses on assets and things, but it's actually equity that will bring you the freedom. It is not the cash flow, right? This is the reason why I'm okay with people doing rent to rent.
I was literally my mind was going there exactly.
Right.
Yeah.
So rent to rent is a great, what we call stepping stone strategy, because it gets you in the thing of doing something, being a property investor, right? You're experiencing having to manage assets, doing all that, but you're not putting a huge amount of capital, right? Again, you're kind of renting before you buy. You're experiencing, you're internalizing before you get that to say, this is actually what I want to do. So I'm all and well for people doing a couple of rent to rents. It gets them into the whole negotiating and doing things outside of the normal routine. But eventually, what you should do is use that as a stepping stone to then go find your first HMO, right? And then figure out how you gear up, borrow as much as you can, right? Which is part 2. Then step 3, which notice right, which is how are you going to get out of debt by year 10? So when we look at deal analysis, I'm not focusing on cash flow. Everyone's like, no. What I'm looking at is how much equity will this have, right, 20 years from now? And because that is what you're passing on to the future generation. So for me, when I do deal analysis, I'm looking at what is the equity, the wealth transfer that you are going to do to your kids unborn. Then that's a good deal. Now, you have some deals, right, that will get you out of a job. I'm okay with that. That's a temporary, like, go do a few rent to rent.
Stepping stone, as you said.
Stepping stone, right? But ultimately, right, what is the deal that you're going to do, right, that is going to look after you after 75? And ideally, you can then transfer that deal or the equivalent, right, to your children. That's what makes property worth it. You can't, all the stuff I did in the city, zero transfer value. It's cash today. It's a gig. right? So for me, the skill of learning it to be able to do a deal in 1 year that over the next 20, 30 years can look after me and other people, this is the skill, that's the highest leverage.
And with all of that, these people on these journeys and they do these stepping stones, they might start doing some rent to rent, which is just kind of property management, which is a great skill to have, especially if you want to grow a portfolio. And then they're doing the developments, and then they're doing the landlording and the rest of it. Back when you started, social media and having a platform and all that sort of stuff wasn't really a thing. There was none of that. Even networking events weren't kind of like that popular or well known. Certainly when I was doing it back in 2000. But nowadays it's kind of everywhere: personal branding, social media, and networking. How important do you think those things are to be successful in property today?
It's a skill, and it's very important. So back when I started, Facebook didn't exist, right?
Right.
And we used to have these kind of little forums and meeting people. That's the reason why I started Property Networking Club, right? It was, I had a property that we were developing. It was over Christmas. It didn't sell, right? So I thought, you know what? I'm going to take one day out, and I'm going to invite all my friends that I'd built connections over the last year or so to that event. I got 50 people to come see one of my developments, right? And it dawned on me that actually I can email a bunch of people, say, hey, look, I've got this development. Do you want to come and have a look at it? So in one day, I got 50 people. We did an event, and that's what allowed me to gear up, because what I've suddenly realized was actually when we have an event and we invite 100 people, right, 3 years later, a bunch of those people end up investing. So what you're doing is you're creating an event, right? And social media, the digital asset, will then translate to experiences in face-to-face, which will then translate into deals and negotiations. So what I always tell people is the fact that people are experiencing you digitally is a precursor to them meeting you physically, right? And then from physical, you end up in transacting.
Yeah.
Right.
Yeah.
So like what you're doing here with Property People, you've upped your game. You're putting yourself in there. That part of learning this. This is a skill now, right? It's always been, right. You've got to be promoting, and I'm sure when Property People does a live event one day, right, you will see the translation of that.
I hope so. We need to talk about that. And okay, so in terms of advice, what's the best bit of advice that you've had over the years?
Give me a context.
Could be anything. Could be about business. Could be about life. Could be about relationships. Could be about money. Could be about anything. Which is the best piece of advice that you've ever received from anybody that really, really helped you out, that always comes back to you?
Well, the best piece of advice that I've always had, right, it's this. We all understand compounding. Yeah.
The eighth wonder of the world.
Yeah. And the thing is, people always put that, right, compounding to money, right? And one of the best pieces of advice I've had from an early age was compounding also works in relationships, right? So like for me, for a young age, there's always this comment, which is, you judge the character of a man by the number of relationships that he has that go beyond 10 years. Right? To keep a friendship that goes 10 years, right? And this is maybe a thing that I have just as part of nature that I have, right? So I'm interested in compounding money, but I'm also interested in compounding relationships, right? Because what you find is that all the relationships that go into the decade plus, right? You look back in history and you realize, now I was thinking about this, but we're not quite there. I think we're about 8 years, something like that, maybe 7, 8. But we'll be at 10. And I remember the first meeting that I met you at.
Yeah.
Right? You came to a Baker Street event.
I walked
right?
in and I said that I want to volunteer here because it was the largest networking event in the country, and I just got involved in all of this. I read Simon Zucchi's book, and it led me to a pin event, which led me to another event, and then I'd seen your event, and I
Yeah,
was
yeah.
like, "That's the one. I want to be volunteer there because I want to meet everyone." And I remember actually there's a few events that went by, and you were just so busy with everybody who needed a bit of
Yeah,
your
yeah,
time and this,
yeah.
that, and the other, and I'd always stay till the end. And there was one time that you were walking out, and you said, "Let's catch up next time."
Yeah, yeah, yeah,
And
yeah,
then
yeah.
the rest is
And
history.
you know, and this is the thing that I always say is like, go to an event, right? And if you can, and your time permits, volunteer, join the crew, right?
Yeah.
Put some time in. You'll get connections. All of these things activate, and you compound. So if you think about from that first meeting, I think I remember you gave me your card, and then I gave you a bit of a brush off, which is standard, right? Because you said you want to be a crew, and I said, okay, we'll have a chat.
Yeah.
And so this is what we normally do when we invite
That's
people. We
right.
say, you get you know, volunteer for 2 events, right? You got to turn up at least an hour or 2 early. You got to stay at least an hour or 2 late,
Yeah.
right? And at the end of 2, right, we're either gonna put you on the team or we're
That's
gonna
right.
say, no, this isn't for you.
That's
Right, and
actually
we're going to
what
push you hard, and you know that's part of it. And the reason is because what I find is that the people that will go and do that, I've always monitored and kept track of the people who attend an event and the people who crew. Right, there's always at least a 20 or 30% greater success rate from the people who turn up early and stay late and put in more effort. So the people that naturally go in and volunteer and giving their time, not knowing that they're going to get any benefit, and you know, I think in
Helped me,
that
definitely.
in that first year, I pushed you around and in the crew.
Yeah.
But what I also know is from that I can see that the attitude you have with the events is going to be how you're going to have with your business, and you know, then we do it fair, right? So we then open doors. Sam, right? I'm going to introduce you to this person.
Yeah.
Go here. All right, I'm going to get.
It's all been very helpful.
Yeah. And we want people, you know, there is plenty of room at the top, right? You know, there are enough properties. I don't have time and interest to buy everything, so I'm happy to help people. Me sharing my information does not dilute my net worth.
There was, I think that's one of the reasons why we get on very much. You've always been very relationship driven, which I think sings true to my values as well, which I love. And actually, one of the other things that I remember you told me is that I'm not sure, maybe you still think that today, which is that you don't need to be the best, you just need to be in the top 10, 20%. And you said there's plenty of room at the top and everyone's kind of successful. And is that something that you also kind of believe today?
Yeah, actually what I tell people is you don't have to what you're doing on the podcast. Let's be fair, right? Okay, the people that you're inviting on the podcast are probably in the top 1%. Right, in sort of skill set. I mean, if you look at some of the people you've had here, they're
Some very cool people,
yeah, right. And what I say, it's great to hear from them, but actually to succeed in this business, you've only got to be in the top 20, right? But here's the other bit: you've got to be in the top 20, probably for between 5 and 10 years.
Consistently.
Yeah, and it's the consistency that is what wears people out. Loads of people are what I call sparklers, you know, right? they come in, they're in for a year, loads of energy.
Nice and bright.
Right. So the thing is, this is why I say find your pace.
Yeah.
Right.
Actually, probably the marathon, not a sprint. That was one of the first things I was ever told. And you've got to love, I think, whatever you do as well, which I truly do. So I do see myself doing this for another 20 years. With that, what's the worst piece of advice that you've ever received?
Okay, worst piece of advice I've ever received. Let me think. Okay, so early when I got started, the worst piece of advice was just get out, get busy, get going, right? And then you'll kind of figure it all out. And why I think that's the worst piece of advice is you're pampering to the societal thing of like, I need to do a deal to say that I'm a property investor. Right? And why I think sometimes people get very quick into executing is now that sets them in a path. And remember, the average property is owned for like 20 years. So you really do need to think, right? You know, right? That's why I'm saying like I'm okay with people doing rent to rent, because the most important thing is always when you're doing things, think about whether it's a one-way door or a two-way door, right? So buying a property, right, is kind of a one-way door, right? There's no like Amazon
Hard to move
refund,
back, yeah,
right?
exactly.
You can't just, right? Whereas if you're doing activities, so for me, the most important thing I've found is spend a lot more time figuring out not the deal, but the person, right? So for me, when I'm always helping people, I say, go find people that are like you, kind of think like you, tick like you, that are probably 10 years ahead. Because this then enables you what type of deals and things to work on, right? Most people are just focusing on the asset, right? And they're not figuring out the people around them. So just doing stuff, you end up, the classic is this. People get busy, they run out of money, and then they have to start again. And then they've got to go backwards again. So actually, if you had just not done as, so rushed to get the badge that I'm a property investor.
Yeah, momentum is good, but then you don't want to rush into it and then crash into the wall, and then you don't do another deal because you get a bad reputation, or you just spend more time stressing about how to fix a problem when you
and they
what's
have
that classic quote, which is basically, if I want to chop down a tree, I spend kind of like in an hour, I spend 55 minutes sharpening my tool.
Abraham Lincoln's, which is I'll spend twice as much time sharpening my blade, right? And this is what, for me, what I do is I know that the analysis and the planning is really where you have to. You don't need to bake a pie to figure out that it's not going to work, right? It's the planning, it's the analysis, and spending the time with the other people. You learn that much more. Then you're ready to execute.
What would you say to somebody like that? For some reason it's in my mind, but a doctor a GP that owns loads of practices, doing fantastically well in business, but just knows that they want to diversify, and they know that they want a property portfolio for generational wealth and this, that, and diversifying their income. But they're just a little bit time poor. So they're going, oh, you know what? I just don't have time to look at 100 deals. I looked at 550. I mean, I really thoroughly enjoy it. I still get people calling me today, saying, rather than me doing all kind of just the finance, which is what most finance brokers do, they'll say, can you analyze this deal and find out what we can do with it? And I spend an hour with them doing that stuff because I really enjoy it. But somebody that isn't in property that wants to diversify.
So if you're in a full-time job, here's the way to do it. The key skill is leverage. Right? So the first is, don't outsource deal analysis, because this is the premise of why you're buying it, right? So you got to own that skill, right? You've got to be able to analyze, look at numbers. So yes, you can part-time, you can find time to analyze through Rightmove, all that, so you know what you're buying. Right?
Yeah.
Then if you want, basically, if you're busy, day job, right, go pay someone to go find that deal, because you know what they're looking for. This is what we do. We go to Amazon, they go find all the suppliers, we know what we're looking for, right? So this is leverage, because what you're earning, do your J job, will pay for it, and the deal will stack up.
And you still, exactly.
A finder's fee, when you know what you're doing. Now, what I wouldn't recommend is just go to a random finder, what have you got, and then try to find the best one in that. No, find something worth looking for patiently, and then go. There's plenty of events you can go. That's how you leverage all the people that I see. Right? They know. If I looked at your hands, right, I can pretty much tell that you haven't picked up and laid a bunch of bricks or that, because
not
that's
in recent years, no. And even when I did, it wasn't, for a couple of hours.
Yeah.
Maybe.
So the trick is, right, that the property is allowing you, there are certain things you should leverage, right, and find other people to outsource and do. And there are other things you don't outsource, you internalize. You have to make those decisions, because that is the thing that differentiates. So for deal analysis, you can get other people to developments, you can get offers made. We all hire solicitors, right? We can save ourselves a penny or two, spend 3 years learning how to be a lawyer and do our own conveyancing, right? We don't. We just in time hire the person to do that.
You've been in the property industry for many, many years, and surrounded yourself with lots of people that have done very well, and probably know a fair few people that have not done as well. This podcast is called Property People. What sort of traits and characteristics do you think are important for property people, to be successful in the industry of property investment development?
To be successful, definitely you've got to think a little bit different from everybody else, right? You got to have got to be a bit crazy. Who am I to sit here and think, I should own a bunch of assets and I should have this equity and I should have this lifestyle, right? That's part of it. So there's got to be something in you that feels that is part of something that you should have. I think you have got to have a couple of key skills. One skill is you've got to have good analytical skills. You've got to be able to analyze deal. The other thing is you've got to have leadership skills, because no one does property by themselves. You've got to have an army of people, and even though you're paying them, they've got to want to work. They've got to want to come and work for you, whether that's on-site, off-site, investors. These are all the skills, right? So what I always say is you've got to have that leadership skill. There's something about your personality, your behavior, that people want to be drawn to work with you and third is you've got to be curious. You've got to want to figure how things work out, not just look. It's like when we're doing a development, right? We're always using that as a way of developing ourselves, right?
Yeah.
How can we solve problems? So you've got to be one of those people that is constantly wanting to solve problems. Those are key skills that I see in all the people that are successful.
Very good. And the final question is, if somebody wanted to reach out to you and catch up with you, pick your brains, work with you in some capacity, what's the way that they can find you?
Best way that you can get in touch with me is go to the website propertynetworkingclub.com, right? There's a contact button there. I personally read every single email through the contact page, so it's very easy. You can find me through the propertynetworkingclub.com.
Lovely. Thank you so much, Vanish. We will be doing this again, I hope, in the next year or two, because I'd like to catch up with you. There's a lot more things that we could have gone into about property in general, and planning and development and construction and processes, because I know that you've got a wealth of experience in all those sorts of things. But I'd like to thank you for joining us today, and we'll see you again soon.
Thank you very much.